The currency of the second largest economy in West Africa seems to be on a free fall, which started at the beginning of the year. Right now, Ghana Cedi is the second worst performing currency in the world, behind bankrupt Sri Lanka, and that says a lot. What effect is this currency depreciation having on the already struggling economy, and what can be done to halt the slide? That's our first conversation for today. We'll also be looking at another economy which is faced with debt challenges. Could the African Development Bank help chart a way forward in Zimbabwe? And we're getting into your personal finances again today. Talk of inflation is everywhere. Is there a way to inflation-proof your finances? We'll talk to a money expert later on in the show. Welcome to Business Edge. I'm Tolulope. Adeleru-Balogun. Let's start with the African business headlines. The latest Treasury statistics show that Kenya's new president will inherit more than 500 billion Kenyan shillings, or about $4.17 billion owed to suppliers and contractors by ministries and state agencies. Pending bills rose to 504.7 billion Kenyan shillings at the end of the last financial year in June, a 40.39% jump over the 359.5 billion Kenyan shillings in the previous year. This is the biggest annual jump on record. Rating agency Fitch is projecting an interest cost of more than 45% of revenue for Ghana from now till 2024. This is specifically interest on its outstanding facilities. Fitch says government interest costs reached 47.5% of revenue in 2021, considerably above the current B median of 10.7%. The audited financial statements of the World Bank for the fiscal year 2022 show that the bank is yet to disperse about $8.12 billion to Nigeria. These undispersed loans may drive Nigeria's debt to the World Bank from $12.72 billion up to $21.15 billion. This could also increase Nigeria's debt to the lending institution by 66.27%. And staying in Nigeria, Dr. Jumoke Oduwole says that the $750 million World Bank-backed State Action on Business Enabling Reforms program is aimed at creating 21 million full-time jobs and lifting 35 million people out of poverty by 2025. Dr. Oduwole, special advisor to the president on ease of doing business, explained that the program was designed to deliver concrete results across 4 reform areas with 8 disbursement link indicators, including land administration and land investment process, improving business, enabling infrastructure, increasing sustainable large-scale investments, and enabling firm operations. Those are a few business headlines we have for you at this time. When we come back, our focus is on West Africa's largest or second largest economy. What will it take to save the Ghanaian cedi? The conversation after this. The Ghana cedi has depreciated by 35% against the US dollar this year, making it the second worst performing currency in the world after Sri Lanka's rupee. The Central Bank of Ghana's Monetary Policy Committee held an emergency meeting last week, brought on by the country's unprecedented economic challenges, ranging from the deteriorating cedi to high inflation and the rising cost of living. The committee wasn't scheduled to meet till September. Unfortunately, there may not be any relief coming soon, as inflation is projected to accelerate further in the coming months. In July, the government started discussions with the International Monetary Fund to support its economic programs as part of efforts to hasten the country's recovery from challenges caused by the pandemic. The question many are asking now is what can be done to save the cedi? Dr. Josh Bamfo, partner and head transfer pricing and economic advisory services for Andersen Nigeria, joins me now. Dr. Bamfo, welcome to Business Edge again. Thank you for joining me.
Thank you, Tolulope, for having me.
So we're back to this conversation. It seems we had one just about 2 weeks ago, and we're back here again because unfortunately things seem to have just gotten much worse for Ghana. So there are a number of issues that can lead to currency depreciation. In Ghana's case in particular, what we witnessed was that the Cedi plunged to the lowest level on record rather plunged to a record low last Monday, and then it has been unfortunately underperforming since January of this year. What really is going on with the Cedi?
All right. I think there are a number of factors. And the most important one, in my view, has to do with the Central Bank of Ghana, which is the BOG, Bank of Ghana. Its inability to actually intervene in the foreign exchange market in terms of supplying more forex to meet the excess demand. Just like any market, whether you're dealing with products or you're dealing with forex, a market is made up of two forces: demand for a particular commodity or a service, and the supply of that commodity or service. And it's the demand and supply forces that will determine the price of that particular product or service. In this case, the price of foreign exchange is the exchange rate. So where there's excess demand by the public and then there isn't a corresponding supply, then it puts upward pressure on the Ghana cedi against the dollar, leading to the rapid depreciation of the Ghana cedi against the dollar, for example. So clearly, the central bank's inability to intervene in supplying more forex to meet the excess demand is the main reason why we are having the fast depreciation of the Ghana cedi. But it begs the question, why isn't the Bank of Ghana being able to do this? In the past, at least in the short term, Ghana had access to the international market where we could issue Eurobonds and we get USD, and then the central bank can then intervene, at least in the short term, to meet any shortages in the supply of forex. But because of the downgrading of the credit rating of Ghana as a sovereign nation, due to our high debt to GDP ratio, which is now hovering around 80%, and the investor community lacking confidence in the government's ability to pay, finance those debt. That means that we cannot get access to the international market. If you cannot get access to the international market in terms of the private sector, then you might want to go to, the international financial institutions such as the IMF to get concessional loans. And those ones do come with some conditionalities. Luckily for us, IMF has agreed to engage.
Yeah.
However, the timing of the issuing of those funds is what is the issue, is the concern now. What we hear is that the earliest we can get some funds coming from the IMF could be the first quarter of next year, which means now till then, how does the Central Bank of Ghana, which is the BOG, intervenes? The good news we've had so far is that Parliament has approved some loan from Afri-Exim Bank, which is the Africa Export and Import Bank, in terms around 750 million USD, which can help in terms of the intervention in the short term. If that happens pretty soon, that can at least stop the bleeding. The other good news is that in the latter part of the year, there's a possibility we might have some kind of cocoa, syndicated loans, and that can also help out. So there's some light at the end of the tunnel. But at the end of the day, the key issue is that the BOG, which is the Bank of Ghana, is finding it very difficult to intervene in the forex market to supply more forex to meet the excess demand that the public needs in terms of importing, commodities or services or even capital. And that is a challenge that Ghana is facing now.
So you've wrapped up a whole lot in this very first answer, because I was also going to talk on something we touched on last time we spoke, which was the external and the internal factors that are bedeviling the Ghanaian economy. And when you look at those external factors, they're the same one many African economies are facing now: debt, credit rating downgrade, supply disruption. Do you think that if the Russia-Ukraine crisis had not happened when it did, or had not happened at all, would Ghana be in this particular situation? And how much of an issue or impact has that had on Ghana's economy and therefore the cedi as well?
So I think the Ukraine-Russia crisis basically kind of sped up or accelerated a challenge that we're facing right from the onset. Even when the current government took over power, we've always had this debt challenge. The debt to GDP ratio, as far back as 2016, just before the new government took power, was over 50%. All right, so we already had this debt to GDP ratio, encroaching the prohibitive 70%. So this problem did exist. Now, the advantage we had then was because the economy was doing better in other areas, such as economic growth rate, averaging around 7% from 2017 to 2019, prior to COVID-19 and pandemic in 2020. There was a lot of confidence from the investment community in the Ghanaian economy. So there was no challenge like borrowing from the international market. There was a lot of capital inflows, to demand our, government bonds and all that. So we couldn't actually see the problem, that was a bit kind of buried, at least for the short term, until there were these exogenous factors. So two major exogenous factors exposed us. The first is COVID-19.
Yeah.
What COVID-19 did was it made us move away from our fiscal consolidation agreement we had with the IMF when we went to the IMF in 2015. So we're supposed to make sure that our budget deficit on an annual basis as a percentage of GDP did not exceed 5%. But because of COVID-19 crisis, we ended up exceeding it significantly because expected revenues fell short and we needed to spend way more to save lives and jobs. So debt to GDP ratio, budget deficit to GDP ratio went above 10%, double digit. And there were other issues such as the financial sector cleanup and all that. So COVID-19 started the exposure. Now, just about when we thought that we're going to be able to bring things under control, the projections from IMF and all these other international financial institutions look to Ghana bouncing back strongly post-COVID-19.
And
then we had this Ukraine-Russia crisis. So that is the double whammy. And that in itself exposed us because at that point, our debt to GDP ratio had gone to a point where the credit rating agencies were uncomfortable. And once the investment community lost confidence in our ability to pay these debts, all right, and we lost access to the international markets, then we went on a downward spiral in terms of, depreciation, in terms of inflation. And that also hurts your ability to grow the economy back to the levels we had prior to COVID-19.
And I think Ghana's current situation is a warning to many African economies because that double whammy of COVID-19 and Russia, Ukraine is affecting all of us. But some people, unfortunately, like Ghana, are just ahead of the rest of the economies on the curve. So let's look at some of the things from the Ghana Statistical Service, which has looked at month-on-month inflation between June 2022 and July 2022, increasing by 3.1% to 31.7%. And that means this is the 25th consecutive month of increase. And it's the highest level on record since December 2003. We can say all these figures and talk all these numbers, but at the end of the day, what is this looking like for the everyday Ghanaian, for daily lives of Ghanaians, this high inflation and the depreciation of the cedi? What does it translate to for Ghanaians in their day-to-day life?
So inflation, we call it one of the macroeconomic evils of any economy, all right? Because what it does is it erodes the purchasing power of everybody. Not only the wealthy, not only those who want to import stuff. Whether you import stuff or you buy imported products or not, inflation is going to affect you, especially when it has to do with necessities such as food, all right? Because food inflation is on the very high side, one of the areas that are hard hit by this inflation. So for the average Ghanaian, this is something that really hurts them most. And that's the reason why the number one objective of every central bank, including the Bank of Ghana, is to rein in inflation. Unfortunately, depending on the source of that inflation, all right, it might not be as easy to rein it in. And this is one of the challenges we face today. The major source of inflation in Ghana today is emanating from the cost side. They call it the cost push inflation. In other words, it's because the cost of production has gone up and producers are passing on that increased cost to the final consumer in the form of increased prices. When that is the case, all right, just increasing interest rates in order to reduce people's ability to borrow and demand does not necessarily bring inflation down as quickly as if it was the case where there was excess supply of money in the system and people were just demanding goods and services. In that case, when you increase interest rates and cost of borrowing is too high and people do not demand as much, inflation gradually comes down. So this is going to be a very challenging period. And this is not the first time the global economy is facing this. It happened in the 1970s due to OPEC crisis, which also had to do with oil. So the average Ghanaian is actually being hard hit because food inflation is on the high side and food is a necessity, whether you have a job and you're earning salaries or not, you still need to eat. When it's hitting stuff like transportation, then it hits the average Ghanaian. When it hits something like rent, it hits the average Ghanaian. So this is a major challenge. And I think the president has come out to clearly accept the challenge. And I think the reason why there was this extraordinary meeting by the BOG Monetary Policy Committee is in part to deal with this inflation issue vis-a-vis the exchange rate, because the exchange rate is also causing what we call imported inflation. All right. If I'm going to change so much cedis just to get a dollar in order to import a product, I'm going to pass on that additional cost to the final consumer in terms of higher prices. So dealing with the exchange rate also will have implications in terms of dealing with the inflation. But all these policies is going to slow down the economy in terms of economic growth, because whenever you increase interest rates, what is happening is that cost of borrowing is high, so investors are not going to be able to invest as much as they could before, and that can slow down the economic growth. So today, it looks like the BOD's focus is to deal with inflation and the exchange rate issue. It's only when they have those two under control that they will start implementing monetary policies that will help stimulate the economy in terms of high growth rate again. So this is a big challenge.
It is. And you mentioned the emergency meeting that the MPC had. So let's just look at what came about. They've decided to raise benchmark interest rates by 300 basis points to a record 22%, but also decided to hike the primary reserve requirement of banks from 15% to 12, or rather reduced from 15% to 12%, which will be gradually implemented from September to November. Do you think, with how deep the issue and the challenges are right now, that these moves by the MPC, as well as maybe one or two other interventions the government is trying, will they have any impact in any foreseeable time?
So what we need to be mindful is that some of these monetary policies have signaling effects, all right? So with the central bank having this extraordinary meeting and then increasing the monetary policy rate from, let's say, 19% to 22%, it's clearly telling the public that we see inflation as the number one evil facing the economy, and we need to rein it in. So we are going to do whatever it takes, to actually rein in inflation. And to do that, we are increasing the interest rate, which would and the MPR, which would then have effects on other interest rates. Cost of borrowing goes up. Household sector and businesses will slow down in terms of borrowing and spending, and hopefully inflation rate will stabilize and start having a downward trajectory. It's only at the point that we are comfortable that we've reined in inflation that we'll start decreasing the monetary policy rate to signal that now our focus is on economic growth. Now, you're not going to solve this inflation rate overnight. Inflation is one of the most difficult macroeconomic indicators to rein it in, especially if the source, as I said, is from the cost side as opposed to the demand side. So I think this is something that we need to be very mindful of, and be hopeful that some of these policies actually work. But I think at least this is giving us a clear indication as to what is very important to the BOG, which is reining in inflation and dealing with the exchange rate issue. And then it's only after we've solved those problems that we can go back to reducing interest rates in order to encourage investment and therefore stimulate the economy in terms of high economic growth rates again.
Okay, so I want you to look into your crystal ball, but to do that, I want us to also take a trip down memory lane and get a historic perspective here. So a 30-year analysis shows that every time that the Ghanaian cedi has dropped for 15 straight weeks, and there have been about 28 instances of this, the fall has extended each time. And we've just about passed the 15-week stretch again for the cedi. So if you're to look into your crystal ball, do you think that this unfortunate depreciation of the currency will continue for how long? So fill in the blanks for me.
So in my view, if the Central Bank of Ghana is not able to inject the much needed additional forex into the forex market, the cedi will continue to fall. I want to believe that the 750 million USD loan that has been approved by Parliament that they are going to get from Afri-Exim Bank, or they have already gotten from Afri-Exim Bank, has to be injected as soon as possible. If they're able to do that, that will bring some stabilization, because that stabilization is extremely important. If not, you have speculators in the market who will start hoarding the few dollars they have with the hope that the cedi further depreciates in order to take advantage of some rent-seeking behaviors. So it's very important that the central bank actually intervenes as soon as possible, inject the much needed forex, bring some stability, make sure that speculators are taken out of the equation, Then over time, getting to the end of the year, last quarter, we get the cocoa syndicated loan also in foreign currency, inject as much. Then early next year, we have the IMF and funds coming in. All this can help us in the short term. But ultimately, what is important, when we talk about forex, we're talking about export and import. So import demand and export supply. So we need to make sure that we continue to restructure economy to become more export-oriented and import-substituted. If we don't, this problem is going to continue. It's just going to rear its head when there's an exogenous factor. But it's important that we get it right this time around going forward, medium-term, long-term, restructured economy. You become more process and industrialized economy. You have raw materials, you process them. Today we have African growth. You have the AFCA, Africa Continental Free Trade Agreement. We can actually export to other African countries, and we can also export outside of Africa. We need to be more export-oriented. And the more export-oriented you are, the more supply you have of forex coming into the country. But the more import-dependent you are, the more you demand for forex in order to pay for those imports. And that creates problems in the medium to long term.
Yes, I think we are very aware of that kind of situation here in Nigeria. Dr. Bamfo, my very last question and very brief answer. If we're to continue to see a slide in the cedi, what do you project will happen? It was just a few months ago that Ghanaians hit the streets protesting the rising cost of living, but we're seeing inflation continue. The cedi is not taking them as far home as they would like, and it's not doing as much for them as they would also like. Can you see possibly protests in the future? What do you think would happen if the cedi continues to depreciate?
I mean, if it continues to depreciate, I think from a political point of view, the opposition party might take advantage of that to actually encourage something like that. But I think what is important that we all need to learn from is that this is a global crisis. Inflation is high in almost every country. In UK, for the first time in decades, it's gone to double digits. In the US, we are dealing with something similar. All right. But Ghana's own is unique because we had this debt challenge even prior to 2016, and we got exposed because of these two major external factors, COVID-19 and the Ukraine-Russia crisis. So we need to be a bit more objective and fair here. That look, these are external shocks that we are dealing with, and we had our own vulnerabilities before they hit us. So we need to be more solution-driven minded, all right, and say, how do we solve this? And how do we make sure that economies are more robust so that in future, when there are such shocks, we can actually contain them better than what we are doing now, we're experiencing now. So for me, I think even though there could be protests, we need to be very reasonable and understand that these issues were beyond, to some extent, that of the government. And it's important that we find creative solutions that is not only for the short term, but for the medium and long term, so that we have a more robust economy on a going forward basis.
All right, Dr. Josh Bamfo, thank you so much. It's a pleasure. Apologies for interrupting your vacation, but thank you for answering our call when we do call.
Thank you very much, Tolu, for having me.
And watching the second largest economy in West Africa struggle has been very difficult for many people, but the depreciation of the cedi to the second worst performing currency around the world is one that seems to may have awakened some more impetus from policymakers and the government. In the coming weeks, we'll see if Ghana can find a way to stop the slide and get back on the right track. You're watching Business Edge. We have international business news coming for you, and Lekan Obanjo is standing by.